Stop. Do not skip this video. If you care about your 401k, your savings account, or the cash in your pocket, you need to listen very closely to what I'm about to tell you. While everyone on social media is losing their minds over the politics of the massive, historic merger announcement between Netflix and Warner Bros. Discovery, the smartest money in the room just made a move that went almost completely unnoticed by the retail crowd. January 16th, 2026. The Washington Post reports Donald Trump buys $1 million in Netflix Warner bonds. January 17th, 2026. Reuters updates that number. It wasn't just $1 million. It was part of a $100 million spree into corporate debt. The Wall Street Journal confirms the timing days after the deal announcement. Why? Why does a man famous for real estate, famous for high-risk branding, suddenly park $100 million in corporate bonds? Most people think billionaire investing is magic. It's not. It's a signal. And right now, that signal is screaming one thing. The easy money era is over. The wealth preservation era has begun. Today, we are going deep. We are going to deconstruct this mega merger. We are going to explain why he bought bonds instead of stocks. And most importantly, I'm going to tell you exactly what this means for the global economy in 2026 and how you need to position your portfolio before the rest of the market catches on. I'm your host. Let's follow the money. First, let's look at the catalyst. January 2026. We finally got the news that analysts have been whispering about since the streaming wars cooled off in 2024. Netflix and Warner Bros. Discovery are merging. This isn't just a merger. This is a monopoly. You're combining the viral algorithm of Netflix with the prestige library of HBO and Warner. Stranger Things meets Game of Thrones. It's the ultimate content fortress. Now, normally, when a deal this big happens, retail investors, the dumb money, rush to buy the stock. They see the headline, they get FOMO, and they buy shares at the top. They think, oh, bigger company equals stock go up. But let's look at the math. Mergers are messy. They involve debt, they involve layoffs, they involve regulatory scrutiny. The stock price, it's volatile, it's a roller coaster. And this is where the former president's move is genius in its simplicity. According to the Wall Street Journal, Trump didn't buy the equity. He didn't buy the stock. He bought the debt. He bought the bonds. For those of you new to the channel, let's do a masterclass. When you buy a stock, you own a piece of the company. You are betting the company grows. If the company goes bankrupt, you get zero. You are last in line. When you buy a bond, you are loaning the company money. You don't care if the stock price doubles or drops by 20%. All you care about is, can they pay the interest on the loan? Trump looked at this merger and said, I don't know if the stock will go to the moon, but I know that with Batman, Harry Potter, and Squid Game under one roof, they will definitely have enough cash flow to pay me my interest. He chose guaranteed income over potential growth. And that is the first clue that the economy in 2026 is terrifying the billionaires. Let's widen the lens. Reuters reported that this wasn't just a Netflix play. This was part of a $100 million purchase of corporate bonds. To understand this, we have to look at the macroeconomy of 2026. We've survived the inflation spikes of the early 20s. We've seen the AI bubble deflate slightly. But now we are looking at something different. When a billionaire takes $100 million of liquidity, cash that could be used for buildings, for campaigns, for crypto, and locks it into corporate bonds, they are making a bet on yield and safety. This is what we call risk off. If Trump thought the S&P 500 was going to rip another 20% this year, he'd be in an index fund or buying blue chip equities. If he thought the dollar was going to collapse tomorrow, he'd be 100% in gold or Bitcoin. But he's buying corporate bonds. What does that tell us? It tells us three things. First, he believes interest rates have peaked. If you buy bonds now, you are locking in today's high rates for years. Second, he thinks a recession is possible. In a recession, stocks crash. But if you own the debt of a massive essential company like a media utility, you still get paid. And third, he wants cash flow. Think about the capital stack. If Netflix Warner goes bust, bondholders get paid before shareholders get a dime. In the volatile world of 2026 politics and economics, Trump is essentially becoming a bank. He is lending money to corporate America because he trusts corporate America to pay him back more than he trusts the stock market casino to give him gains. Let's get technical for a minute, because this is how you make money. How does this trade actually work, and can you replicate it without having $100 million? When you buy a bond, you are looking at the coupon and the yield. Let's assume these Netflix Warner bonds are paying 6 or 7%. If Trump drops $100 million at an average yield of 7%, he is generating $7 million a year in passive income. He doesn't have to sell a building. He doesn't have to sell a golf course. He just wakes up and the interest hits his account. But here is the viral secret that the mainstream news won't tell you. It's about price appreciation. If the Federal Reserve cuts interest rates later in 2026, which many experts are predicting to fight the coming slowdown, what happens to bonds? When rates go down, existing bond prices go uppy. If Trump locks in a 7% bond today and new bonds next year only pay 4%, everyone wants Trump's bond. His $100 million investment could be worth $110 million simply because rates dropped. He gets the interest and capital appreciation. It is the double whammy of investing. Can you do this? Yes. You don't need to call a broker at Goldman Sachs. You can buy individual corporate bonds on most brokerage apps. Or, easier yet, you can buy bond ETFs. But ask yourself, if the former president is moving into fixed income, why are you still 100% in speculative crypto? Now, we have to address the elephant in the room. The comments section is already going to be blowing up about this. Is this insider trading? Did he know? Let's look at the timeline from the Wall Street Journal again. He bought after the announcement. Legally, he's in the clear. If he bought it the day before, the SEC would be knocking on his door within the hour. But buying after tells us something about his psychology. This wasn't a gamble. Insider trading is for gamblers who want a quick pop. Buying after the news is a strategic allocation. He saw the deal structure, he saw the consolidated debt of Netflix and Warner, and he said that debt is mispriced, it's too cheap. It reminds me of what Warren Buffett did with Occidental Petroleum. He saw value where others saw risk. Trump is looking at the media landscape and realizing that in a recession, people might cancel their gym memberships. They might stop eating out. They might not buy a new car. But they are not going to cancel their Netflix subscription. It is a consumer staple now. It's a utility, like water or electricity. And owning the debt of a utility is one of the safest bets in history. I want to pivot to my favorite topic, real money, metals, gold, silver. If Trump is buying corporate bonds, what does that say about U.S. government bonds? Usually when you want safety, you buy U.S. treasuries, the risk-free rate. But Trump bought corporate bonds. He is choosing to lend money to Netflix over lending money to Uncle Sam. Let that sink in. He is getting a higher yield, yes, but he is also voting with his wallet. He perhaps sees the U.S. national debt, which is spiraling out of control here in 2026, as a risk. When you buy corporate paper, you are betting on the private sector. For those of you holding gold and silver, don't panic. This isn't a sell signal for metals. In fact, a portfolio that mirrors the billionaires often looks like this. 10 to 20% in physical gold and silver as insurance against currency collapse, 30 to 40% in real estate hard assets, and now, huge allocations into fixed income for cash flow. Stocks, speculative tech, that allocation is shrinking. The smart money is moving from growth at all costs to return of my capital, not just return on my capital. If you are sitting on a pile of cash, waiting for the big crash, you are losing to inflation. You need that cash to work. Bonds are the parking spot. Gold is the vault. Trump just parked $100 million. There is a buzzword floating around Wall Street right now, the rich cession. It means a recession that hits asset prices like stocks and luxury homes, but doesn't necessarily cause mass unemployment immediately. If we are entering a period where stock growth stalls, the lost decades scenario, then dividends and bond yields become the only way to make money. Imagine the stock market goes nowhere for 5 years. If you own Netflix stock and it stays flat, you make zero. If you own the Netflix bond and the stock stays flat, you make 7% a year. Over 5 years, that is a 35% return. Trump isn't betting on Netflix taking over the world. He's betting on them just staying alive. That is the difference between a billionaire mindset and a Reddit trader mindset. The Reddit trader needs a 1,000% gain to get rich. The billionaire just needs to stay rich. But here is the kicker. You aren't a billionaire, so should you do this? If you are young, you still need growth. You need stocks. But if you are approaching retirement or if you are terrified of a market crash, this $100 million signal is your permission slip to diversify. It is your permission slip to look at bonds not as boring, but as survival. Okay, let's wrap this up with an action plan. Trump made his move. Here's how you make yours. Step 1, audit your risk. Look at your portfolio. Are you 100% in stocks? If the market drops 40% tomorrow, does your life change? If the answer is yes, you are too exposed. Step 2, learn about fixed income. Don't just blindly buy. Research bond ETFs. Research treasuries. Look at I-bonds. Understanding debt markets is the graduate level of personal finance. Step 3, watch the spreads. Keep an eye on the difference between corporate bond yields and government bond yields. If that gap gets wide, it means the market is scared of bankruptcies. Trump thinks Netflix is safe. Do you? Step 4, don't forget the hedge. I still believe in gold and silver as the ultimate hedge against government stupidity. Bonds pay you paper money. Gold protects your purchasing power. You need both. History leaves clues. In 2008, the smart money bought distressed debt. In 2020, the smart money bought tech. In 2026, the smart money is buying high-grade corporate bonds. Donald Trump just placed a $100 million vote of confidence in the creditworthiness of the American media machine and a vote of caution on the volatility of the stock market. The merger of Netflix and Warner Brothers is huge for entertainment, but the purchase of their debt by a former president is huge for your wallet. It's a signal to take profits. It's a signal to seek yield. It's a signal to protect what you have. The market is shifting. The rules are changing. Don't get left holding the bag while the whales move to safety. I'm going to be tracking this bond portfolio every single week. If he sells, I'll tell you. If he buys more, I'll tell you. So you need to destroy that subscribe button and ring the bell right now. You cannot afford to miss the next update. Comment below, bonds or stocks? Where are you putting your money in 2026? Let's fight it out in the comments. Thanks for watching. Stay liquid, stay smart. I'll see you in the next one.